traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. We are going to get started with our morning analysis, but I have to take a little bit of a break for station identification. So Lee Zhao said, "Holy cow, you're Asian? I thought you were some white guy with a beard." Do I really sound like some white guy with a beard? Is that what I sound like? Yeah, really? For real? I thought like some Grizzly Adams dude. Is that's what I portray? Steven says yes, I do, and because I have as Steven. Okay, here, this is me. No, this picture is actually from a couple years back. That's me, my wife, kids. Their kids are younger there. Uh, there's me and my wife right there. That's last year. Let me see. This is this year. That's me with my buddies playing golf. That's me in the middle. Uh, yeah, that's me and my family right there. So no, I'm not a big uh, bearded guy. Okay, so anyway, I had to make sure that you guys know that I'm actually I'm half Chinese. I'm a tall half Chinese guy though. I'll tell you, because my dad's Iowanian. He's like this from the Midwest, you know, corn fed, bred, blonde hair, blue eyed, 6'4", monster man. Yeah, I just kind of, my mom's a little short Asian lady, so I just kind of ended up somewhere in the middle. But it's funny because I'm taller than most of my American friends. I say American, like it's not like I'm not American. I'm more of my Caucasian friends. I'm taller than them, which is always interesting. What's really interesting is when I go to like Hong Kong, or I go to Taiwan or Singapore or anywhere in Asia, I'm like, a little bit taller than everybody else. So it's always interesting. All right, enough of that. Let's go into the markets. Let's get into the chart. So let's go to our bias chart here, and let's go into the euro. So I'm going to do that right now. Let's see. Toby said you were squinting in the first picture. Laugh out loud. Toby, that that's what happens when you're in the sunlight and you don't wear sunglasses and it's sunny out and you're half Chinese. You squint. So okay, enough joking. Enough joking. He goes, that wasn't a race thing. No, I'm just messing around. I don't care. I mean, look, I was in the Marine Corps. I was in the infantry. Now, and the infantry is like the epitome of the Marine Corps. I mean, that's where Marines go to die. All right, and I went there specifically to go to Desert Storm. Back I enlisted in the 80s, in the late 80s, to go to Desert Storm, and being in the infantry in the Marine Corps, you kind of develop a thick skin because you're around like every walk of life. It doesn't matter if you're African American, Chinese, Irish. It doesn't matter. Everybody's just kind of lumped together, and yet we all had a bunch of everybody's like throws around racial slurs jokingly. It's just part of military lifestyle, I guess, at least in that branch of service it was. So I developed quite a thick skin over the years. I don't really care. I am who I am, and I don't care what you call me. It doesn't matter to me because I know how I think about myself. So I never take anything as racial. I really don't. I joke about it a lot, but it doesn't bother me at all. Nothing does. So anyway, okay, enough about that. Let's go into the chart. So here we are on the euro, and we know right now. And by the way, this hourly chart, you're going to have to watch it. The reason why I say that is because we're already leaving a little bit of a wick here. If we close, in the low 70s or the 60s, we got 35 minutes or 25 minutes to do so. If we do, just watch this. This is typically not a good sign. If you get like a little shooting star here as you're running up, might give us a little bit of a reversal. That wouldn't surprise me because I think we are range bound. Okay, I believe we're bouncing around in a range. But actually, I believe what we're doing is we're tightening this range. You can see it right there. And matter of fact, I'm just because I want you to see it, I'm going to delete it because it's this chart's getting a little, excuse me, it's getting a little messy. Let's just delete the stuff we don't need right now. Okay, so we I don't need this fib level for right now. Okay, these fibs are important because I want you to understand why we're stopping where we're stopping. Okay, so this is horizontal resistance, right? It's confluence. So it's what got me short yesterday. So we have confluence right here. We have the 127% extension right here. We have the 618 right here. We stalled right there. And now we paused yesterday. So let me zoom back out again. We paused yesterday on this trend line. Now I had the trend line drawn yesterday like this, right? I had it drawn like that. If you rewind to yesterday, we were right here. Okay, this is yesterday at this time. So, hey, we should find some support right around this 111. That should be, you can see the breakout point, trend line support. We dipped below there, probably with some stops and then right back up again. Now, fast forward to right now. Well, if you just take that trend line and now you match the low right there to where we're at right now. So you have to redraw trend lines. I mean, that's just part of the trading. You kind of redraw them as you go, because you don't know what the market's looking at. You don't know what specifically, the market's looking at that moment in time. You might be slightly off. I know I am, as we go. So anyway, we have really key supports coming in now at 111 and a quarter. 111 and a quarter is because that's not only as a trend line support down here, but now it's also the upsloping trend line, and you can see it's confirmed by a couple different data points. So yesterday it made sense, and I'm glad I actually took some profits off the table when we got below 111 yesterday. I am adding back to my euro short right now. I'm basically short at these prices. Okay, I reshorted what I covered, and now my averages are at 81. So I'm short like right here, just so you all know. I haven't added it all back though either. So just so you know that. I took a little bit more off the table yesterday, but I've already booked a lot of profits, so now I'm kind of trading with the house money, if you will. So 111.25 is going to be important support today. Okay, 111.25. Now, and I'm going to put an asterisk there because I do think it's important intraday. Because if we break through that and you're long, you really have to. What you have to be worried about is a big double top forming. Bam, bam. So if we break through this trend line, then that sets up for a bigger double top moving into next week. Now, what could be happening too is this. So just keep this in mind. This I obviously I'm more concerned with at the moment, that we are here and we do this, and now we're wedging for a possible breakout higher. Do you guys see that? So I'm also concerned that we have a wedge here that we're building. That's why if we continue to hold the support, I probably won't be short the euro dollar over the weekend. I'll probably just scratch it, rather not be in the euro if that happens. Okay. All right. So 112. I want to say 112.10, but it's not. It's actually 112. I think it's higher than that. What's the spike high here? What is it? 112.15. Okay. 112.15. If we get a sustained break above 112.15, you are probably not going to want to be on the short side of the euro. I know I won't. Okay. All right. So we are still in a range. As frustrating as it is, we are very much in a range still. Okay, let's go into the cable. So the pound, this is almost day 7 of me wanting to toss my computer out the window. We just keep running right back into these ranges here, um, right into the range highs. As DK in the chat room said earlier this morning, it's like yesterday was a tease. It's just teasing lower. But it's so frustrating. I mean, it's like I'll be happy when I'm not trading the cable anymore. I just don't like. I'm so not excited about trading it at the moment. Maybe it'll develop into something greater, but right now, 157 is key resistance. Supports at 155. Really, I mean, I'm not going to write down 155 today, but I'm just saying this is here. We just kept these lines sitting pretty much at the same. Okay, it's very frustrating. So for today, though, that spike low down here from yesterday, well, that's what we're watching right now. And remember, right now we're still making higher lows. So that's what's very frustrating about it. We're making lower highs too at the same time, but it's just lower highs, lower lows means we're just consolidating. And interesting thing about the cable, though, is really the rally that we've seen in the euro hasn't translated into much of a move in the pound. So 155.70, it's not great support, it's just support. Now, key resistance is 157. That's critical resistance. We're in a range, and frankly, if we break above 157, this thing is going to turn bullish again. Because if it does, then we're in this channel. Okay. If we can break above here, but it's really struggling. I mean, the cable, like I said, with the euro bounce, cable's really been struggling recently, and I think a lot of that is doing because expectations out of the Bank of England are shifting. Where people are not expecting a rate hike in 2016 or in 2015. I think a lot of institutions have really, were banking on the fact that the Bank of England could be, the first central bank, or at least, match a rate hike with the U.S. sometime this year. But that's looking increasingly unlikely. Let's go over to the Swissy. So the Swissy has pulled back. Now we're looking at this channel support as being very critical. Now I'm just going to redraw everything from yesterday because we didn't quite dip down here, but remember the Greek gods. Okay, if we dip down to, I'm not gonna sing the Greek gods this morning. You're saved. It's Friday. I'm not gonna torture you this morning. Yes, you're welcome. Okay, so if we get a dip down here to 97, I mean, you got to use that as an opportunity, a place to get long. I mean, that's just bottom line. Oh, Paul, I have to. Oh my God, my ears almost bled.
No, that's
oh, Kip, my ears almost bled too.
sorry.
Oh my God, I actually just I actually just got my hairs on my back just stood up.
I just had to.
Thanks, Kip.
Bye.
All right, bye. I don't know. Seriously, I think I just threw up in my own mouth. Oh, okay. Miguel said the cat took off. That's funny. Okay. Resistance. Resistance still is at 98 cents. So we had that written down from yesterday. It's still the same. 97.98. If you can buy it at 97, that'd be great. If you're long, 98 might not be a bad place to take some profits off the table. Okay, but still bullish. Dollar yen. Let's go into that one. So remember yesterday, and remember earlier this week, we were right here. say, hey, if we break 125, it'd be bullish. We broke 125. It gave us a false breakout. And I said, man, we got a false breakout. It's probably going to get a breakdown. So we broke down, and then we got a false breakout. And I'm like, oh my God, now we got a megaphone pattern going. So now we got this like megaphone pattern going. Um, I really, frankly, I just don't know how to play the yen. But as I told you guys this morning, especially if you weren't listening in earlier, I am very concerned right now with the yen, and I am short pound yen, euro yen, and Swiss yen, and I'm up like 60 some pips in the Swiss yen. Euro yen, I'm down a couple pips. Pound yen, I'm down a couple pips. I'm basically break even on those. I mean, and they're all small positions, but um, as I said this morning, I'm not going to hold any yen longs over the weekend because I'm really concerned that the Bank of Japan might do something silly. It's not like a high risk, but it's still a risk. And because let's hope they don't have some sort of response for China over the weekend. And some competitive devaluation type of response. Like initiating quantitative easing earlier than the market had anticipated. By November. I don't want to be stuck in that whirlwind where, over the weekend we gap back up way over here, and then all the other yen pairs rally too. So I'm gonna stay away. But anyway, dollar yen. I mean, it looks like we're supported here at 124. It's hard to buy it. Just it's hard to buy it just because equity markets look a little heavy. So you know. Uh, I think key support will be at 23 and a quarter, or 3/4. I'm sorry, 123.75. Okay. Resistance. I mean, we'll just mark 124.50, but 124.60 rather. It's 50% retracement. 124.70 is 618. Actually, I think that would be more significant resistance if we got up there. I just don't know if we're going to get up there. I think it's looks something like this. Let's remove that for a moment. Okay. 124.70, just in case, we get some strong US data. Definitely in a range here. Let's go over to the Canadian. So the Canadians pulled back, and remember, we're at the channel highs. I mean, plain and simple. I think with crude oil bouncing, we've only bounced like 30 cents in crude, but still, with crude oil bouncing, the dollar Canadian has come off. We should see some support down here at 130. 130 is a round number, and it's also, it's a pretty big number for the dollar Canadian. Now, here's one thing I want to point out with the dollar Canadian, and I have a long in the dollar Canadian, and it's right. My average is right around here now. With the stuff, and I took some profits off the table after buying it below 130 earlier this week, and now my current cost average is about here. Here's the thing. This dollar Canadian, if it closes the week below 130.65, that is concerning because that is a major breakout point on a monthly basis. So if we have a weekly close below there, that is going to be concerning to me, and that's the dotted red line. Okay, this one right here. So I want you guys to just know that if we close like in this channel, I probably won't be long the dollar Canadian. I probably won't stick around. Obviously, if we close above the channel resistance here, I'd be, more inclined to be on the long side. This is just basically what we're doing, is looking at that. So resistance today is 131. Support is 130. Okay. That's key resistance, and support's going to be 130. So, and it's still bullish. We're just in a downward sloping channel and a very bullish move. 131. That's critical resistance. I'm gonna say, this is the very, very bullish move right now. You know, relative strength on an hourly basis is back to neutral. You know, we've rallied. We're in a, very bullish trend. We're just, in a downward sloping channel, kind of like when we were here. Same type of deal before we surged higher. So I think it's a little too early to write off the dollar Canadian. Just like I think it's a little too early to be bullish crude oil. You know, crude may close the week above 42, but still it's pretty bearish, price action. Let's see, that was the Canadian. Let's go to the Kiwi. So the Kiwi weak retail sales. Now we're in this downward sloping wedge. We're in a downward sloping wedge. Resistance 66.60, 50. Support 65. We're still in the wedge. Just because we're getting a bounce right now doesn't make it bullish. We're showing really key rejection here. It's just it's in a wedge, and that's a bearish wedge. You know what this reminds me of? Do you guys take a guess at what chart that looks exactly like? I fell for it too. I can actually show you the chart to the T. It looks just like it. Benedict, you got it right. Guess what chart that looks like? Esther, you're correct. If you go back to gold, I'm going to show you something. Okay, had me fooled too. So this is I want to show you. So if you go back to gold, this is a daily chart, but this is exactly what happened in gold. So here's gold, right? We were looking at this long time ago. I mean, this is what, a year and a half ago. Remember when we were looking at gold, we're like, oh my God. And I didn't draw that trend line too perfect, but let me redraw like that, right? Okay, so right here we go, oh my God, downsloping trend line, that's had us really captivated for a year and a half, breakout, and gold ripped, right? We were there. We were like, oh my God, gold broke out. I'm like, oh man, gold looks like it could go back to 1400. I remember this conversation. I can almost do it verbatim. It looks like we're going to go back to 1400. I even actually got short some dollars there because I thought gold was really breaking out. Made a little bit of money, but I was playing dollar to the short side. I thought gold was going to rally. I thought we were going to see these levels again. And then all of a sudden it just fizzled. Gold went, and then it turned into this. And then it turned into new lows. You see that? It's exactly what happened in gold. Now, go to the Kiwi. Here we are today in the Kiwi. Same exact thing. Oh my God. Here's the Kiwi. This is going to turn bullish. We broke the downtrend line. Oh man, this is great. Remember, this is just 3 weeks ago. Oh my God, we're going to get a squeeze in the Kiwi. Yada, yada, yada. Here we are wedging again. Now, it doesn't mean it's going to break down today, but I'm just saying that the scary thing is it got a lot of people long. And like I've told you the last couple of weeks, when you convince somebody like me who's extremely bearish the Kiwi, you convince me that a bounce is coming. I'm not long. Now, I got long the Kiwi on crosses. I didn't get long the Kiwi dollar. But still, if you convince a long-time bear which has been me over the last 2 years or more, you convince me that, oh my God, a bounce is coming. How many people that weren't bearish the Kiwi got long? So now you've got a lot of people that got on the long side of the New Zealand dollar. You got people that cover their shorts, and now we're just, I mean, because I'm looking at the Kiwi at this point saying, man, if we get a solid break below 65 cents, I'm getting short the Kiwi, right? Anyway, same thing. It happened in gold. Looks just like gold and the Kiwi. All right, when I come back, we're going to do the Aussie and then dollar index and then anything else that we got going on, and then I'll be back. And we'll get ready for some news coming out. Don't go anywhere. TGIF, folks. Glad you're here. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all, and I want to welcome you all back. Excuse me. Let's see here. What I wanted to show you is the euro dollar. See that hammer, or the inverted hammer, or the little shooting star that we formed? There's that hourly. It did pop up. So be careful. I know we have data in the next half an hour. I'm just saying that, a lot of traders might have got caught long here, and might, try to bleed a little lower from here. So just be very careful. Let's see here. A couple of things. Where am I? We got to do the Aussie. So let's go over to the Aussie dollar. Okay. So here's the Aussie bouncing around. Still, we're if this high holds at 74 cents, didn't we write down resistance at 74 yesterday? Right? If this high holds, and hi ho silver, this is a really good opportunity to short the Aussie. Actually, I don't know if I want to sell it ahead of the new. I don't know if I want to short it. I'm tempted, but I don't think I'm going to. I don't know if I want to at this moment. But if you short it here, look at the risk. I mean, you're risking basically from here maybe about 40 pips, because you want to be out if it breaks above 74 and change, 74.15, maybe. But it's a decent risk reward to be on the short side here. All right. I'm not going to do it. I'm as much as as tempted as I am at the moment. I just, I've got some short euro, short pound, long Swissy still, long dollar Canadian. I don't need any more exposure, because I'm not super convinced about the dollar at the moment. So, I don't need to extend my positions any further. But I still believe that the 74-cent level, at least 74.10, is going to be good resistance here. So we'll write that down. 74.10. We're still in a bearish trend. I mean, we're still actually printing lower lows. Okay. Or lower high, excuse me. Now, support for today will be today's lows, which is 73.25. Okay. Let's go over to, oops, I did not want. Let's go over to the dollar index. Okay, so here's the dollar index. Now, remember Tuesday when the dollar was falling under pressure, the morning edge, so that would be 48 hours ago, we talked about a possible double top. Okay. Now, I said be careful, because if we close back above that trend line, it's going to negate that double top. We're not going to get a double top. We're going to false break, and so we did. We actually closed back above that support. Yesterday we stalled. Today we're starting to roll over again. Okay. So what's really going to be key today is if we break through this low, whatever the low is here, 95.92, that puts the bearish trend in place. That would mean that the euro did break above 112. You know what I mean? So that support is at 95.92. I'm going to put 95.90, 95.90. Okay. And if we break through that, then we're going to, we break through like 112 in the euro dollar up to the upside. We're going higher. I mean, the euro is going to go higher. The dollar index, as I mapped out for you guys yesterday, and this is one of the things that I'm actually looking forward to. If the dollar index drops down to here, and I'm trying to get you guys all the way to September, okay? If we drop down to this support over the course of the next couple of weeks, I want to be a buyer of the dollar index down here, because here's the thing. I want to own the dollar going into the September FOMC meeting. So let me just give me a second, guys. Give me 1 second. I'm trying to find the date. It's the end of September? Hold on. Can't be the beginning of September, is it? I'm going to have to go look at the actually FOMC website. Damn it. Give me a second. September 16th and 17th. How did I miss that? Okay. So today's the 14th. So let's imagine a month from now. So let's imagine 2 weeks from now, we end up down here. I want to start getting long the dollar. A month from now, we're here. This is where I want to be ahead of the FOMC, because if I can get long some dollars and ahead of the FOMC, we're here, then the Fed, I believe the Fed's going to hike rates, me personally. That doesn't mean they're going to. I'm just saying that my gut feeling says they are. I don't think China really matters to the Fed. I actually believe the Chinese action, just so you all know this, and I said this the last couple of days, but I'll say it again just so you all can hear. I believe what China has done over the last 24 hours is actually a positive for the Chinese economy, and I think the Fed will view it as such. I mean, yes, I'm sure the Fed's like, okay, well, China's economy is slowing, but they're being proactive. And, are they concerned about China? I'm sure they are, but I'm sure that they look at that the corrective nature of the renminbi as being more of a positive, which will actually in turn support the Chinese economy, which actually gives the Fed more room to actually hike. That's my 2 cents, okay? That's my opinion. So I think the Fed's actually, and since the Greece, situation is passed, and looks like everything in the Eurozone has given us a, kind of a green light to move ahead. I think the data has been good enough for the Fed to follow through. So if we get this pullback in the dollar over the next couple of weeks, I'm a buyer, because if the dollar bounces back and they actually hike rates, then the dollar should break out. So I want to be long the dollar going into the next couple of weeks. And so I'm not, even though I happen to be long some dollars right now, I'm not married to my dollar long positions either. You know what I mean? If that makes sense. But I guess what will be key today is watch the dollar index, because if the dollar index can close below these lows, that means the euro closes above, 112. Hey, maybe that kickstarts the dollar pullback a little bit, and I'm going to welcome it. I mean, I may not be happy today necessarily, but I'm looking forward to it over the course of the next couple of weeks if it happens that way. Okay, so resistance, it'll be just today's highs. I mean, today's highs are resistance for the dollar, 96.50. Okay, and we are definitely in a range. Now let's real quick. Let's a gander at the peso and the Nordic currencies really quick. I haven't even looked at them at all. I mean, not even glance. So let's take a real quick look. So look at the peso. This freaking thing is so strong. It's unbelievable. I mean, if I was a dollar bear, and I can't trade the peso, but if I was a dollar bear and I was shorting the peso, I would want to strangle somebody because this thing is it's not going down, you know. And I guess the freaky thing about that is if it's not going down, it's probably going to go higher. So I don't trade the peso, and it doesn't look, other than being pretty close to resistance, you know. If you're long, that's good, because if it breaks through 1650, it's just going to continue to break out. But it doesn't look like there's any place to strategically buy it, which would be down here. Here's the Norwegian krona. Um, Norwegian krona came down a little bit, but we're still just really tight trading range here, ahead of ahead of um, ahead of the possible breakout with crude. And here is the Swedish krona. Swedish krona has pulled back. Now we've pulled back to a 50% retracement. We recognize the US dollar Swedish krona was bearish a few days ago. But we're coming into probably some pretty key support. For those of you guys that want to be long the US dollar Swedish krona, this might not be a bad bounce place. But yeah, I don't know how excited I'd be about that right at this moment in time. Okay, so here's your bias chart, and then I'm going to take some questions. I go into questions before we got all this data coming out. All right, let's go into the way back here.